All right, folks, welcome back. This is our short little AM session review for the Emini S&P. So we're looking at the daily chart. I want you to remind yourself of how we went to this level here, swept it, we broke down, returned to a SIBI, sell side imbalance, buy side inefficiency, failed. You can go back and watch the last reviews. We talked about that, showed live how we were looking for 40.80 and 40.42 and 3/4 and lower prices have reached to and through this old low. And we're inside this order block here, this last down close candle. As a fair value gap, we have the high and the close of the candle. That's what's being denoted here. So we dug into that today. We had relative equal lows here on the daily chart, and the market swept down below Monday's holiday volume. Hourly chart, you see we had a nice little imbalance in here, had 1-2 times into the imbalance, made a low, traded up into the imbalance once more, just taking out the relative equal highs with this here, and broke lower, consolidated, traded up into the fair value gap here. I tweeted this morning, said I didn't have a bias right away because I don't want to put anybody out there in harm's way, because I know a lot of you don't listen, okay? A lot of you just simply want to jump on the bandwagon and start pushing buttons, and you're not even prepared yet. You don't have the experience, and typically days after a holiday where we have either no trading or shortened trading sessions, the AM session or morning session can be problematic. And if you don't have the experience to note what it is and what it's likely not to do and what it is likely to do, you're probably going to hurt yourself. One losing trade becomes another losing trade trying to fix it, and then you create a huge amount of drawdown. So this morning I sent a tweet, and you're welcome to look at that tweet in my comment that I have pinned below of this video. And it'll also be a link to the video where you can actually watch me engage and execute and manage a trade idea based on what I'm going to show you here. So it's not just me talking about the hindsight, because I know a lot of you young guys out there like to just point fingers and say it's all hindsight. I push a button every day. So fair value gap, we were hovering inside of that. I mentioned that this would be the sell side liquidity pool here in the tweet. I'll let you look at that and compare and contrast this. So we had a draw on liquidity to sell side. I didn't want to tip my hand to anyone because I know you're all going to want to try to chase it and do something. And I would not want that on my conscience that you tried to engage on a day after a holiday and get hurt. So just to prove, again, authorship and such, I engaged today based on what I'm going to show you. There's a small little fair value gap in here. See that right there? The market trades up into that and then sells off. That's a little interesting. Bread and butter type setup. And the way that would be utilized is entering here at the fair value gap low, that being over here. That's the fair value gap high. Trade down once more to get below this old low. We don't need to go below this low again to find a bread and butter type setup. But I was shorting here on this big run down here. And I was looking at the break from this old low at the fair value gap to this target, and I used that as my range, and I wanted to find something that would be below 50% or equilibrium between this low, or this level rather here, and this fair value gap low. So from this range here to here, here, that was the projected dealing range. In other words, where I think the market's going to go. I think it's going to go. Not that you should have expected it. And I saw a few tweets from folks that are belly aching. Oh, here you did a trade this morning after you told us we shouldn't be taking a trade. I'm trying to be a very responsible mentor, and it would be highly irresponsible of me for me to suggest, again, some of you are, well, most of you, let's be honest, most of you aren't skilled yet. You're just now becoming acquainted to my concepts, or even me, and to follow anybody blindly on the internet is foolish. You don't even know what I'm doing most of the time. So why would you go in there and press a button with live funds? You have no idea what I'm doing. So you won't understand the logic. You'll be fearful the entire time you're in the trade because you won't understand what it's doing. And any little fluctuation against you, which would maybe be normal, you'd get out of the trade and then miss it and then blame me for that too. So you're here to learn from me. Okay, once you understand how to do this on your own, trust me, you're not going to need me. You won't need me to hold your hand. You won't need me to point to examples. You'll be making your own. But you have to go through the process, folks. And yes, it takes a little bit of time and a lot of time for others. But the range from this fair value gap low to this old daily low here and Monday's trading liquidity, okay, being here, layered to this. So all of this in here was targeted. So let's zoom in here to a 5-minute chart. You can see an old low here gets broken here. And you can see that run right back up into it here. And then sells off. You have a fair value gap here that doesn't get traded up into. And you'll see me note in the video link below that takes you to my Twitter. I was willing to let it trade back up into this. I was not going to change my mind about it. That could have been just one more opportunity for me to enter again. And had it done it, I would have done that. And then I took the limit order exit for the remaining 4 contracts. So I went short 6 contracts, took a partial, and then again, because this low here in that range high here, the blue line and this thick red line, this is the fair value gap low. This is the old daily low. That's your range. If you put a fib on that between this level and here, find 50%. So when we're going short, the market efficiency paradigm is suggesting that you as the trader and my student, we're looking for something below equilibrium to target because that's what the algorithm is going to do. And what is that? This level here is an old low. Let me go back up one more slide. You can see it. That's the first low, and here's the second one. Okay, so that second one is below 39.20. That's the reason why 39.18 was being targeted with my limit order. And yes, I did not get all this. I'm teaching you low-hanging fruit. Teach me how to get out, Michael. How do I find the setups that are consistent? This is how I'm doing it. Okay? I'm not teaching or promising that you're going to get down here, even though I pointed that's where it was likely going to go if it was going to sell off. Before the opening, I didn't know what it was going to do. I wanted to see how we opened, and we had displacement, and obviously that gave me what I was looking for. But we broke below this low here, and that right there could have been your model, returning back to the fair value gap low here and into the, and you'll see that fair value gap on the lower time frame. You can see from this high to that low, 3.5 standard deviation of that range. In other words, what we're saying is this high to that low, 1, 2, 3.5 of that range gives us pretty close to the low of the day. And it's below that old daily low. So there's a matter of blending concepts and such for targeting. All right, and here is the 1-minute chart. You can see at 9:30 we had a Judas swing. If we're looking for lower prices down here, I'm not suggesting that you would have, but I proved today that I was. But again, not to lead you into scenarios that may get you hurt. Judas swing runs up, hits the fair value gap low. This candle right here, I'm going to show you the executions. You can watch me actually put the executions on in the link below. The market breaks lower. Fair value gap here, it doesn't get traded to. I was willing to see it trade up into that once more. If I had it done it, I would have entered again more shorts. And below that low is where you'll see the target. And here's my entry on that candle. On the way down, I got filled, but we were inside of that fair value gap noted here on that 1-minute chart. Partial here, first one. So I took 2 of the 6 contracts off there, and then the remaining 4 came off on a limit order below that old short-term low. And I did not need to trade to the draw on liquidity. This is a crucial point, folks. Don't insist that your target or your draw on liquidity is the be-all, end-all objective, and you have to hold for that. That is foolish. The whole point of doing this, the whole reason why you should be even in this industry is to make money. That's it. And there's only one way to make money. Doing consistent things that yield consistent positive results. And that's what I'm teaching. That's how I teach partials. When most of the time, clowns in this industry will say partials is stupid because you're putting on an initial risk and then you're reducing the potential profit. These people are not consistently profitable that say that. I guarantee you they aren't profitable. But folks that learn how to do this, they're constantly feeding their bottom line. And it's not about doubling their account. It's not about making Lamborghini lifestyle. It's about making your account grow and being consistent about doing it. And when you can do these types of things, it's harvesting new equity highs. And that's rewarding, it's encouraging, and it's motivating. And you're going to need to have that in your journal, because there's going to be periods where you go into drawdown, you lose, give up some of your equity. And you got to go back to those times where you can see you had periods of growth. And they will encourage you when the inevitable comes, when you have losing trades or drawdown. So if we take a look again, I'll show you the details here. You can see this in the video as it forms and fills and such. 6 short at 39.40 and a quarter on this candle here. So I missed it as it was going up. I was trying to hit it as it was going up into that. But I was managing a 1 minute chart, trying to get everything scaled up so that way the recording would make sense to everyone. And then the first partial, I closed 2 at market when we were better than 10 handles. So 39.40, 39.30, that's 10 handles or 40 ticks. Market breaks lower, it hits the limit order, and the remainder 4 contracts comes off at 39.18 even. So 22 and a quarter handles. So I gave up all of this for the example of showing you you don't need to be perfect. Until next time, I wish you good luck and good trading.